Hello and welcome to Morning Brief Market Sunrise. I'm Ramzan Karmali, live from Yahoo Finance's studios in London. It's Tuesday, 26th August. Coming up on the show, the market reacts to President Trump's claim that he has fired Fed Governor Lisa Cook. Elon Musk XAI sues Apple and OpenAI. We'll tell you who may buy the sports giant Puma, and should you buy Nvidia shares before they report earnings tomorrow? So grab your coffee and let's own the morning. Well, we kick off the things you need to know by looking at where US futures stand after President Trump said he had fired Federal Reserve Governor Lisa Cook. The Fed governor responded by saying he didn't have the authority to do so and said she would fight Trump and remain in office. And it's looking like a pretty weak open this morning. Markets are reacting to that news, which is an unprecedented escalation of tension between a US president and the central bank. This has unsettled traders who now perhaps are focused on concerns about the future independence of the central bank. Also, as this comes after Trump's criticism of Jay Powell. Longer dated treasuries declined and that steepened the yield curve, suggesting many investors might be betting that Trump will ultimately have his way here. Trump, in a post on Truth Social late Monday night, has claimed to fire Cook. The announcement follows a week of threats against Cook surrounding allegations of mortgage fraud. Forcing out Cook would give Trump an opportunity to secure a 4-person majority on the Fed's 7-member board of governors. Her term was not set to expire until 2038. Now, it wasn't immediately clear whether Cook intended to challenge the dismissal in the courts. If she challenges the firing, Cook could immediately seek an injunction reinstating her while litigation moves forward. Okay, the next thing you need to know takes us to tariffs. President Trump has insisted that South Korea will stick to the terms of its recent tariff agreement, including hundreds of billions of dollars of investment in the US, despite lobbying efforts by President Lee Jae-myung. They met yesterday and both expressed optimism for close cooperation on North Korea, collective security and shipbuilding. But the 15% tariff still remains. It was also announced yesterday that Korean Air would buy 103 Boeing airplanes in a deal worth $36 billion. Also on Truth Social, the president said that the US will increase tariffs and impose export restrictions on countries that tax or regulate US tech firms. This is Trump's most direct threat to retaliate against nations that he views as discriminating against the likes of Google and Meta. And the last thing you need to know before the opening bell rings is that Elon Musk's XAI has sued Apple and OpenAI, alleging they broke antitrust rules by thwarting competition in artificial intelligence. Apple struck a deal with OpenAI last year to integrate ChatGPT into its Siri voice assistant and writing and camera features, as the tech giant made a big push into AI on its smart devices. Now remember, OpenAI CEO Sam Altman and Musk, well, they used to be allies. Okay, let's move on to earnings out this week. One to watch for sure will be Best Buy. Here's what you need to look out for. Take a listen.
The shares of Best Buy slipping ahead of second quarter earnings, falling alongside other discretionary stocks as the Dow and the S&P 500 do remain under pressure heading into the close here. Join me now, we have senior reporter Brooke DePalma. Brooke.
Josh, good afternoon. What we're seeing here as Best Buy is set to report Thursday before the ballot second quarter earnings report, largely based upon Bloomberg consensus estimates. It is expected to be another quarter, the second consecutive quarter of same-store sales decline when it comes to Best Buy's second quarter report due to this ongoing pullback of those big ticket discretionary items like appliances and consumer electronics that consumers have just been pulling back on as we make way into 2025. Another thing that analysts are looking out for is commentary around the back half of the year. Joe Feldman of Telsey Advisory Group cited in a note that Best Buy is expected to, hash over easing comparisons and also AI newness around that. That could help boost computing and mobile phone sales. In addition to that, newness, innovation like that Nintendo Switch 2, that's also expected to boost sales in the second half of the year, especially around that holiday season. And the third thing here is any sort of commentary about the launch of Best Buy's marketplace that launched just last week. That third-party marketplace will give it more insight, or rather more opportunity to dive into products that it isn't able to sell in store with those third-party sellers, similar to what we see on Amazon as well as on Walmart.com, as it looks to make an edge up against the competition position to really stay in the game here. We do know that also those alternative profit streams have been super successful for retailers, so all eyes will be on its ad business and that key marketplace.
And Brooke, finally here, before I let you go, what do we think Best Buy is going to tell us about tariffs?
Yeah, well, we do know that in the first quarterly earnings call, they did cut their guidance around revenue, adjusted earnings, and same-store sales growth. And Wedbush Securities emphasized in a note that they expect that they will reiterate that guidance largely, which includes the impact of tariffs. Across their call back in May, there's been lots of trade headlines, including that extension on China. We do know that the company sources from China, Mexico, Vietnam, South Korea, and Taiwan. But one of the biggest things that investors say has been key here is their switch, or rather shifting production, especially from that key China market. Back in March, about 55% of the products, the cost of goods sold, were sourced from China. Back in May, that was down to 35%. And so we expect to hear more about that on the call.
All right. Thank you, Brooke. Appreciate it.
Okay, we're going to focus on European markets and something you may have missed overnight. Well, if you look at the European boards, you can see a sea of red there, but just look at France's main benchmark, the CAC 40, down 1.4%. In fact, it was down over 2% earlier. Why? Well, French Prime Minister François Bayrou has called a confidence vote that could topple his government as soon as next month. So what's happening here is that prospects of a government crisis in France are driving declines all across Europe. The risk premium is making a comeback, and that's affecting European debt as well as stocks, including those banks that had been performing particularly well so far this year. The key indicator to watch here is the yield premium between the French 10-year government bond and its German counterpart. It has widened out to roughly 78 basis points, its highest since April. Last week, that spread was just 70. French financial stocks took the biggest hit when it comes to stocks after the Prime Minister indicated that President Macron had agreed to call back Parliament early in order to allow the government to present its fiscal plan and to hold that confidence motion. Remember, last year, Bayrou's predecessor, Michel Barnier, lost a confidence vote again because his administration was trying to push through austerity plans. Now, what's happening in France, combined with news out of the US, think tariffs, Trump's pressure on the Fed and broader uncertainty is all weighing on market sentiment today, with a number of ramifications. Just to mention another example in Europe, Germany's Commerzbank, it's down nearly 6% this morning. Actually now nearly 7% this morning. That's after the Bank of America analyst downgraded the lender to neutral, saying its valuation now appears stretched. And we'll have much more market analysis of key stocks in the second part of the show. We'll ask the question, to buy or not to buy Nvidia today. Welcome back to Market Sunrise. Well, today we want to dive deeper into the most talked about stock there is, Nvidia. The AI giant, which now makes up more than 8% of the total market value of the S&P 500, is reporting earnings tomorrow. And the question on everyone's mind is to buy or not to buy Nvidia today. Well, my colleague Jared Blickery looked at the data, as he wisely does, to figure out the answer for you.
Nvidia is once again approaching record highs after an 8% pullback, and just in time for earnings this week. In today's Stocks in Translation, we're taking a look at what tends to happen to the stock historically after reporting quarterly earnings. First, let's take a look at what would happen if you bought Nvidia just before the last earnings announcement and you held for various parts of time here. So we have 1 day, 1 week, 1 month, 1 quarter, and 1 year. So again, you're buying just before the announcement, and then you're holding for a period of either a day here, and the median return is 3% for a day, 4% for a week, and 3% for a month. It's not great, and by the way, we're using median for some technical reasons here, but it's very similar to an average. And sometimes the announcement is going to send stocks up, and sometimes it's going to send it down, but when you average it out or median it all out, you don't really see outsized returns until you start holding for longer periods of time. And this is because Nvidia stock has tended to go up over long periods periods of time. So when you get to the 1 quarter period, you see median returns of 17%. But what really stands out here is the 1 year holding time, because then you can actually double your money plus. That's 117% return for a 1 year holding time. And this, by the way, goes back 10 years. Now, it's not just median returns that we're looking for. We also want to see what percentage of the time are we right. And so for the 1 day time period, we're right 63% of the time if we're buying. That means that you actually should have shorted about 37% of the time. Then for 1 week, it's 68%. 1 month, it's 60%. This might seem like it's decent because it's over 50%, but in my own personal work here, I like to see a return percentage positive of more than 70%, and that's because stocks tend to go up. So once again, when you get to the 1 quarter period, you're seeing percent positive returns 77% of the time, and then not surprisingly, we see the best with 1 year. That's 83% of the time you would see those positive returns. Now, we have one more chart here. This goes back all the way to the beginning of the century. And let's think of it this way. If you had bought and held for 1 year after each of these earnings reports, this would be your profit and loss over time. So again, you're only holding 1 year, and we've also smoothed this over 10 periods, which amounts to 2.5 years, 4 reports per year. What you can see is we've actually gone negative a few times. So buying and holding is not always the right strategy for at least for the 1 year time period. But starting in 2015 and going forward, we started seeing some outsized returns. And now you can see over the last 2.5 years, we are up over 150%. And of course, this can go down, but it's a good reminder that for buying a stock, and especially if you're not a market timer, best to hold for longer periods of time. Finally, I'm going to close with some statistics here. The first statistic here is derived from the options market. Now, if you're a trader, you want to know, and especially a short-term trader, you want to know how much the stock is expected to move right after the report into the close of filing day, keeping in mind that the announcement comes after the market close on Wednesday. So into Thursday's close, options market is predicting a move of 5.8%. Now, this doesn't tell you which way the direction it's going to go. Could go up, could go down, but that's the volatility, as we like to say. Now, here's what has actually happened over the last 2.5 years. It has gone up or down about 11.8%. So what you might notice is the options market is expecting less volatility than we've seen over the last 2.5 years. And this is because, and it's informed by this statistic right here, the average daily movement over the last 3 months, not including the last earnings report, but going back to late May, it's only been 2.6%. Volatility has really been reined in on the stock, and so expectations for volatility Wednesday into Thursday close, those have also come down. So putting it all together, NVIDIA holders, you probably want to hold for that 1 year time or greater. And tune into the next Stocks and Translation podcast for more jargon-busting deep dives. New episodes can be found Tuesdays and Thursdays on Yahoo Finance's website or wherever you find your podcast.
Okay, great analysis there. As always from Jared, we'll bring you continued insights about NVIDIA in real time while we wait for those results tomorrow. Currently in the pre-market, they're up around 0.5%. Well, whatever NVIDIA reports, it's set to have major ripple effects across stock markets in the US and around the world. Okay, time for a short break, but stick with us. Welcome back. It's time to dive into trending tickers. Today we start with Puma. The German sportswear brand is seeing big swings today. As you can see, shares in Frankfurt are now trading lower at minus 3.13%. But at one point, they shot up by 20%, Puma's biggest daily gain in more than 20 years. So what's behind the big swings? The main trigger seems to be that the Pinault family, owners of Gucci parent Kering, is exploring the sale of its 29% stake in Puma. Now, Bloomberg reports that potential buyers include Chinese brand Anta, Middle Eastern wealth funds, and American brands. But all remains very much up in the air. One thing's for sure, a takeover would open the door for major changes and potential restructuring at one of the world's biggest sportswear brands. To put things into context, Puma has lost about half of its value in the past year, mostly because of pressure from tariffs, as well as mounting competition from new brands like On Running and Hoka. Okay, let's move on to Japan for another struggling ticker. This one's in the automobile sector. And Nissan, well, it's down again. It's nearly down 7% at market close to just over 6%, at market close to be precise, after a big investor offloaded shares. Mercedes-Benz Pension Trust is selling a 3.8% stake worth around $350 million. Now, it's a relatively small number, but it carries a lot of weight. It's a vote of no confidence that comes just as Nissan tries to recover from big losses, over $500 million in the last quarter, and as the car maker is still going through a complicated breakup with its longtime partner Renault. So the stake sale by Mercedes-Benz is seen as a clear sign that investors aren't convinced by Nissan's turnaround story. The car maker has a lot more work to do to win back credibility. And finally, if you're planning to buy furniture, you need to know about this one. Wayfair stock slid nearly 6%. The sell-off comes after Donald Trump announced new tariffs on imported furniture, expected to take effect within 50 days. For consumers, this means potential price hikes. For Wayfair, which relies heavily on imports, tariffs would significantly complicate business. Higher tariffs could mean rising costs, slimmer margins, and weaker demand, just as the company was showing signs of recovery with stronger than expected sales last quarter. This isn't just about one retailer. Several other furniture sellers have been under pressure. La-Z-Boy to Williams-Sonoma. Okay, finally, before we move on to the last part of the show, we want to bring you an update on Intel. The struggling chipmaker stock has been recovering since Trump announced that the US government was getting a 10% stake. Here's how it's doing in pre-market. It's roughly flat, as you can see, and it's up more than 18% this month alone. Well, yesterday, my colleague Brian Sozzi interviewed former Treasury Secretary Larry Summers. Here's what he had to say about that Intel deal.
I'm surprised by that move. I don't know the details of that situation well enough to understand the transaction. I can certainly see the logic of the government wanting to get something back for taxpayers when it supports a company that has been poorly run. But it comes as part of a general approach to policy, what you might call deals-based capitalism rather than rules-based capitalism. The rather remarkable and I think extraordinarily problematic transaction with Intel, where they were given more export controls, freedom in return for payments to the government, the taking of a share in U.S. Steel as the price of granting a regulatory approval, the deals struck with law firms after threats against those law firms not to be able to enter government buildings. The whole approach of deals-based capitalism is, I think, something that is really quite problematic. And I would guess that when I learn all the facts, I will find this Intel transaction to have that aspect as well. But I don't want to judge the transaction, given that the government is bailing out a company that has been poorly run without understanding things better.
All right, let's turn now to get a quick update on crypto. It's been a very up and down few months for cryptocurrencies for a variety of global factors, and this morning token holders are seeing some losses. Ethereum and Bitcoin, the two largest cryptos by market cap, suffered heavy losses, and over $940 million of leveraged crypto positions were liquidated in just 24 hours. A so-called Bitcoin whale offloaded 24,000 Bitcoin worth an eye-watering $2.7 billion, triggering an overall slide in value. Now, Ethereum, which had set an all-time value high of nearly $5,000 at the start of the week, was also under pressure, falling back to under $4,500 in value. Other crypto tokens also saw losses, with Solana and XRP sinking substantially. The market capitalization of all cryptocurrencies slipped by around 4.5% to $3.85 trillion. Now, much of the peak and troughs around crypto have been linked to uncertainty around tariffs and macroeconomic decisions expected from the Federal Reserve. It's also worth noting now, though, that cryptocurrencies are facing a much looser regulatory environment under the Trump administration. In other news, crypto exchange Bitpanda has decided against listing in the UK, in another blow for the London Stock Exchange. The company, backed by billionaire Peter Thiel, blamed a lack of liquidity in its share trading as a reason as to why it wasn't going to list in London, preferring New York due to government support for digital assets. Okay, before we go, let's get a check on the markets. So let's start in Asia, and markets in the main fell here as investors weighed President Trump's stronger language on tariffs, plus, of course, the move to fire Fed Governor Lisa Cook. Now, Trump reportedly warned of a 200% tariff or something on China if it does not export rare earth magnets to the US, while also threatening levies on countries that do not remove digital taxes and related regulations. Now, South Korea's main index, as you can see, the Kospi, was also faltered as investors assess that meeting between the country's president with Trump and the fact that the tariff deal remains at 15%. Also, look at the Nikkei, down almost 1%. The US Commerce Secretary Howard Lutnick has actually announced that there will be an announcement, on the $650 billion investment that Japan is going to has to invest in the US as part of its tariff deal. Also, don't forget India on Wednesday, their tariff levy will rise by 25% to 50%. And that kicks in on Wednesday. That's because obviously President Trump was very angry that India continues to buy Russian oil. Okay, let's turn it over to the European markets, and the news out of France we spoke about earlier really weighing on all the markets in the region. Traders, especially in Paris, probably more nervous by the fact that all three main opposition parties say they would not back that surprise confidence vote called by the French Prime Minister. And, as we said earlier, French banks suffered quite substantially, down quite heavily. The main three banks there down very substantially indeed. It's also worth noting the UK is down, back from a public holiday yesterday too. Okay, and a quick check-in on US futures too before that opening bell. And they are on the slide. Traders here clearly worried about the implications of firing Lisa Cook. Wall Street is bracing itself also for Nvidia earnings, which land on Wednesday after the bell. Expectations for its results are sky high, with the company stock up almost 34% so far this year, even as restrictions on chip sales to China have possibly cost the company billions. Nvidia's results will also serve as a litmus test for big tech, since the industry's eye-popping investments in AI have started to convince investors to perhaps look elsewhere. Okay, that's it for Market Sunrise for this morning. Stay with Yahoo Finance for continuing live coverage of the markets and your money all day on streaming and online. Coming up next, join Julie Hyman ahead of the market open on Morning Brief. I'm Ramzan Karmali. Go own the morning.